Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the April 13th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend. Let's make sure we have an extraordinary day. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there, too. Go ahead and send me an email. Send it early if you can. And inside the subject heading, please put radio show question, steve@tfnn.com. And inside our Tigers Den, well, any ping will do. So let's go ahead and get this show started on magical, marvelous, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to last show. Right now, we got all the indices in the green with the exception of the spot volatility index, which is trading back above, just slightly, back above its 50-day exponential moving average. Always a dangerous thing. You've got the Dow off 509 points, 2% to the downside. S&P off nearly 2% or 52 points. NASDAQ 100 is doing well because of the likes of Amazon, Tesla, Netflix. What's Apple doing? Where's Apple? And Apple, which is basically flat out there. So it's only down 21 points. Russell 2000 is off over 3%, 40 points. The semis are basically flat out here. So we've got a little bit of a interesting market. But we're going to go take a look at it. Spot volatility, as I mentioned, trade out of 43.76. Gold's up $8. Silver down 42 cents. Lightspeed crude up a quarter. Trade out at 23.01. So let's begin by taking a look at. Well, let me answer the first question that came in. Where are my red lines for the ES Mini and for the? Well, I was going to go to a chart that I thought was there. It's not, so we'll go this way. The question was just simply where's Stevie's red line values for the ES Mini as we speak right now. 25.22 is the number out there. The ES Mini is trading at 27.29. The next question was where is Stevie's red line? That's really referred to, well, I refer to it like that. It's the oscillator unchanged line. That's the official name of it. And if we take a look at that for the Russell 2000 down around the 1072 level. Now, it would take a close below that to confirm that we are headed to the lows and beyond. So the real question is, can we time the market to try to identify, is there a top that's forming sooner, such as last night? And that's a possibility. So let's go do something that we really should do in trying to understand these markets out here. And that is, instead of just looking at the indices, instead of just looking at market breadth, not that there's anything wrong with that, but let's go take a look at what the sectors are doing. Let's go and try to understand the sectors. And we take a look at the sectors. The number one weighted sector out here inside the S&P 500 is the XLK. So let's go take a look at the XLK, try to figure out, did this possibly top or not? That's the question we're trying to answer. So if we pull up this chart out here, you'll see some blue diagonal lines. Those are our trend channel lines. Those were drawn in last week, maybe Tuesday or so. And if we take a look at where Friday inside the XLK, where price got up to, voila, bang, I said bang, right there at resistance. Now, its red line is 79.38. The XLK to say, okay, sayonara, adios, I'm going down to the lows. And folks, let me just make this very clear. Not a little clear, not slightly clear. We're going down and testing those lows. We're going to bust out the lows of March. It's not a matter of if. It's just a matter of when. So right now, what you and I are trying to do is figure out, has this counter trend rally come to an end? Let me restate that. Let me state it as definitively as I possibly can. We are going to, not we, but the market is going to go and not just retest the lows. It is going to blow through those lows. Blow through the lows. So right now, what you and I are trying to understand here is where's normal resistance inside. We're just going to look at the sectors of the S&P 500, try to take a look at them and see what kind of message they are sending to you and I. So right now, prices definitely hit resistance. If price didn't stop at that descending trend line out here, or that trending channel line, then maybe it could have gotten up to the weekly Stevie Green line, which is 87.66, or maybe it could have gotten up to, and maybe it still will, get up to about $91 and create that Gartley sell pattern. But right now, what we know about the number one sector inside the S&P 500 is this thing has hit a significant resistance level. Now, if we're going to start seeing a change in trend, we're going to see it start occurring in the shorter term time frame. So what's the next thing that we do? Well, here you and I can take a look at market breadth of the XLK. So take a look at the XLK. Well, let's actually get to it here. Let me get to the ETFs out here. And let's go to the number one weighted sector. And what we can see here, and you're in the right-hand corner. Well, let me just do this. Well, first, for those of you that can see my screen, you'll see that on the 60-minute and the 240-minute time frame, they have moved to the bearish market breadth. What do you mean, Steve-O? So let's open this up here. Let me expand it. Let me get rid of the stocks that are trading in between profiles out here. And right now, as we speak, at 1:12 in the afternoon, and we had this crossover, this bearish crossover took place this morning at about 9:30 out here. Right now, on a 60-minute time frame, there are 6 constituents that are trading above the top of the profile. You hearing me? 6. Just 6. There are 33 that are trading below the bottom of their 60-minute time frame. Now, luckily for you and I, we've got 4 different time frames that we can take a look at. If we're going to start seeing a change in trend, it's going to start occurring on the short-term time frames. It's very likely going to start occurring on the weighted sectors within inside the S&P 500. If we take a look at the 4-hour time frame chart, this is, as we speak right now, it actually has a crossover. There are 8 constituents traded above the top of the 240-minute chart and 19 below the bottom. That's where you get that bearish crossover, where the red line crosses above the green line out there. And if it ends like this, folks, this could be a retracement. And if it is, it's going to last for a couple more days out here. But it could also be a top, and that's why you and I major top out here. The next top to go ahead and begin to take us down to the bottom of to those lows out there. Those lows, folks, by the way, those are what are referred to and what you will refer to in the past as you take a look at chart as the coronavirus low. That's not if that's all that we were dealing with here, you bet your sweet bippy we could say that was a bottom. Guess what? The coronavirus is nothing with regard to what took place in the markets compared to what's going to happen next. The economic woes out here, and those will produce economic lows. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up off 545, S&P 57. So we began by taking a look at the different sectors. We only got to the first one. That was the XLK. Let's go to what I still believe is a second-weighted sector inside the S&P 500, the XLV. And as we take a look at it, you're going to see a number of different patterns. In essence, maybe the screen looks a little crowded, but let me explain it to you. First of all, if we were going to pick a level where the healthcare sector would make a counter trend rally to, and this could have been weeks ago, we would have said 95.42 was where price will again turn down. Why? That's Stevie's green line. It's a different green line. It's a horizontal green line. It's created by the TD 9-count pattern out there. And what took place on Friday? That, in essence, is where the XLV got up to. Price is now trading back below its weekly oscillator and change line, which is red out here. That's bearish. You can see the daily one. The weekly one is stair-stepped out here because I've got a daily time frame chart and I put a weekly indicator on it, and that's why the lines are stair-stepped out there, because it's got 5 days worth of data to put into that one data point out here. So price right now is below Stevie's red line. That's on a weekly basis, 93.93. On the daily basis, it would be 87.80. So close below 87.80, boom, off to the races to the downside. Now, if price could have cleared, and it still can, if price could have cleared, though, 95.42, then we would have said, all right, then what's likely taking place inside the healthcare sector is a Gartley sell pattern, which would have completed perhaps around 99.92. The 1 to 1A to B equals CD to the upside. But as we can speak right now, the XLK has hit resistance and it's backing off. The XLV has hit resistance and it's backing off. Let's do the same thing out here. I think this is extraordinarily important. I'm doing this also just simply for my own edification. I'm trying to identify and understand, has the market topped? Is the counter trend rally over? So now let's go take a look at the XLV out here. Let's put this out here, and you can see that is the it's the highlighted box area here, this white box. You can see the 60-minute and the 240-minute charts both show that negative bearish crossover market breadth bias. Now, that's a mouthful, and I can only say that one time. But what I can say multiple times is, hey, let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing very well. Thanks for taking the call.
My pleasure, as always. So Goldilocks is what you'd like to take a look at out here. Tell us what you're doing and how I might be able to help you.
You can help, Steve, by looking through your various studies and tools. Currently, June COMEX gold is right at the highs. It's made new daily swing highs. And I'm wondering if there is anything that pops up in your work that we can be looking for as something to monitor closely if price gets to it, as a clue of a tradable high, or at least a short-term high with some sort of pullback thereafter coming. So if you could do that, that'd be great.
Sure. So here's what I would be looking for from the daily time frame, and that's the following. John, on a daily basis, today is very likely going to be bar number 7 of a TD 9 count pattern out there. Now, TD 9 counts can identify tops and bottoms on either bar 8, so the earliest that could form would be tomorrow, 9, which would be Wednesday, or the bar following 9, which would be Thursday out here. So that's what I would start looking for to see if that, in fact, that 9 count pattern unfolds. There's also an A to B equals CD pattern that's out here, a short one, that could take price up to the 1824 level. So when I take a look at gold on a daily basis, I've got price above my green line. That's at 1679. We've taken out the highs from Thursday out here. So that's bullish. Bar number 7 today. I'd say if there's going to be a tradable top, it would be either Tuesday through Thursday out there. Doesn't mean that price has to get up to the 1824 level, but that is another pattern that is in play out here when I take a look at it from the daily time frame. The reason why it would appear to me that gold is also going to at least do that, or at least move higher, maybe make that TD9 count, is if we look at all of the market profiles using my synthetic contract, and this is going to show a different price point than where gold on the current contract is trading. I just simply put this out here for you, John, because you can now see that gold is above the daily profiles, the weekly profiles, the monthly profiles, the quarterly profiles out there. So that's what I see when I take a look at Goldilocks. The only other things that I can go to, or other tools that I can take a look at for you, is take a look at these primary trading ranges. And right now, primary trading range weekly on a weekly basis is 1762.60, and we're trading just like $2 below that level. So if price is able to close above that, even though it's a weekly horizontal trading range, it would just simply fit with the theory that we looked at on the daily time frame chart, the TD9 count, and that A to B equals CD pattern. So that's what I see when I take a look at it. Either there's resistance right about now, and that says, okay, on the daily basis, I don't have any kind of topping signal, or we're just at resistance. And if price can close above it, likely the daily pattern completes.
Great. I appreciate that. That's very helpful. You answered it completely. I will just ask, as I close up and
Yes.
let you get to the rest of the show, if you might, somewhere between now and the end of the show, make reference to the S&P cash and ask or answer the question, is there anything in your work that pops up near the price level of 2650? That was a prior swing high, as also coming into play. If there is, I'd sure like to see it. But thanks on the gold, Steve. I do appreciate it, sir.
John, would you repeat that question again? Did you say 2650?
Correct.
So you're looking for. Wait a minute here. Okay, so you're just so I go get your question clear. You're asking on the S&P cash if I see any support, resistance.
Yeah,
you're looking
anything
for
pivotal in that area, and if so, what it is.
2650. Okay. Hey, John, thanks so much for calling, and have a great day.
Thanks.
You bet. With regard to the S&P cash and specifically 2650, now we were looking at the sectors inside the S&P 500. We only looked at two of them. We looked at the XLK and we looked at the XLV. I believe the number 1 and number 2 weighted sectors inside there. Here you can see the diagonal trend lines. And on Friday, price hit it perfectly. Today, price is pulling back. Do I have anything at 2650? Probably I don't have anything, John, on a daily time frame chart. At 2537, I've got my oscillator and change line. That level will go ahead and move lower if price moves lower out here. But I don't have anything in the 2650 area out there, at least not on the daily time frame chart. Now, let's keep going back and taking a look at these sectors. I think this is an important thing for us to do. The financial sector used to be the number 3rd weighting. It still may be the 3rd weighting inside the S&P 500. What did it do? Well, guess what the financial sector has done today, at least so far as of 126. Now, the reason I say so far as of 126 is because it's a daily time frame chart. And what you and I need is we need to see what is the candle at the end of the trading session. Right now, it's a bearish sash. We'll be right back to explain that. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their number 1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the number 1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the chart that is on the screen, we were taking a look at the financial sector, the XLF. I think through Friday, the financial sector represented nearly 14% of the S&P. The technology sector is 22. Is it 22? Yeah, about 22%. So that's the number one weighted sector. Healthcare sector was number two at 16%, 15.55, and then financial services. So we saw in the technology sector, we saw a definite topping signal out there. We saw the same thing inside the healthcare sector. The technology sector was the descending trend line. The healthcare sector was Stevie's weekly oscillator unchanged line level. In the financial sector, which we're looking at right now, is a Gartley sell pattern. Now, Gartley pattern, and really you can take this off of his book, the book page number 222. That's where the Gartley sell pattern came from. And if you look at his page, he identifies an A to B equals CD in a down marketplace. And it was going back into, well, forget about where he was going back into, but that's what he was showing. This here inside the XLF was a perfect 1-to-1 A to B equals CD as price got up to the 2370 level. And now if we get that bearish reversal candle, today, right now, we have a bearish sash out here. That's suggesting that you have your Gartley sell pattern inside of the financials out here. Let's go take a look at the third or fourth weighted sector inside the S&P 500. The fourth weighted sector is the XLC. So let's go take a look at it. The XLC, the communication sector out here. Let's see what kind of pattern, if anything, we have unfolding. And here, I don't really have a topping pattern inside. So inside the XLC, we're going to have Facebook. I don't know what the total number for the exact holdings that are inside there, but I can say I can look at this chart with you, and I cannot come up with the so-called topping pattern here. Let's look at, but in the other sectors that are out there, once you get through the XLC, the rest of them become 8%, 9%, 2%, things of that sort. So with regard to other sectors, just anything that pops up on my screens that I'm looking at to the left, I'll pull over here. The XLP, one of the things that I notice here is price got up to Stevie's weekly oscillator and change line. It has since turned down. So that's, and if we were going to pick a counter trend rally where price would end, it would have been the weekly oscillator and change line levels out there. What else might be showing some kind here? Let's take a look at the XLB. Give me a moment here to move this, pull this over. So the building materials sector, that has completed a 1-to-1 A to B equals CD, but we don't have the bearish reversal candle today. At least we don't have it yet out here. So be on the lookout there. So if we just simply take the sector by sector, I think it'll help us better than just simply focusing on only one thing that everybody else is looking at. We need to understand what's going on the underlying aspects of the market out here. Another chart that we've got on our screen, this is for Goldilocks. You can see gold in euros actually is at a new all-time high today. Close inside of yen, not so much the case inside of pound sterling as we speak. But let's move away. Well, actually, we want to stay with this chart here, but stay with it from the standpoint of the question that came in. There are two questions with regard to the GDX, and the question was basically one was is it formed a top, and the other is it time to get in. So let's go take a look at both sides of that trade out here. Let's look at the daily time frame for the GDX. See what we can see what kind of patterns, if anything. I may need to reset this. So today is going to be bar number 7. So I know it was John and I believe Mike. So John and Mike, John in Sarasota, Mike in Canada, I believe are asking about the GDX. And when John and Philly and I were taking a look at the gold contract, we were taking a look at its daily, weekly, monthly, quarterly market profiles. We took a look at how gold was trading. Well, we just took a lot of gold was trading in other currencies out here. And we were also noticing that today was going to be bar number 7 of a TD9 count for the gold contract. It's going to be the same thing here for the GDX. So now the GDX, it's got an A to B equal. I don't know if it's a confirmed A to B equals CD. To a certain extent, it doesn't matter. When you trade currencies, this is where you really want to learn the A to B equals CD pattern. Go spend time, troops. Go spend time trading the currencies out there. Oh, I don't have that pattern on this. I've got to switch over to a different chart. Give me a second here, and we'll do that. Well, I know how we'll do that. On the GDX, we'll just come over here, and when we punch up the GDX, we'll get also, it'll show its profiles daily, weekly. So the resistance level for the GDX would have been 29.96, We're trading above that now at 30.47. That was the top of the daily profile. On a weekly profile, the level's 30.27, so you're going to want to certainly watch that as we come into Friday. Now, on the weekly profile out here, this is a bearish structure. It's a weekly profile. It doesn't really matter what's trading at 1:35 in the afternoon today on March the 13th, April 13th. It matters about where is it trading. So, Mike, you're asking, is there resistance out here? On the weekly, 30.27 is a level that you would be watching. We were talking about, or I mentioned the A to B equals CD pattern out here for GDX. Let's go take a look at what that would be. Your A point down here on the trading day of March 16th. Your B point out here, March 26th. Your retracement down into April Fool's Day. The B point, which had volume of 47 million shares, was passed with 68. So there's your A to B equals CD. That could take you up to the 34.03. No reason that it shouldn't, with price trading right now above resistance daily and weekly, as also it's trading above resistance on the monthly time frame. So is now the time to buy, John? No. Is now the time to sell, Mike? No. I think I don't know if the risk reward is there. The average true range on the GDX, if you're going to trade it, is $2.14. You've got to give it at least that minimum room out there. On the trade, I'd rather you see some type of short-term pullback pattern in the gold contract on a 30-minute basis, form some type of bottom to go ahead and step in. I don't know where we're at right now. I think I might have the 30-minute chart that I can pull over. So give me a second here, just so we can see if there's any kind of signal, any kind of a top or anything. So here's the 30-minute time frame. And we know right now is that it's moving higher, doing less relative energy. So you've got a Rhodes momentum indicator top potential. This is on a 30-minute basis, meaning the bar that completes at 2 o'clock will be bar number 8, 9, or 10. 8, 9, or 10 can be those tops. Works on any time frame out here. And with price moving higher, doing less relative energy, it would be all the reason to say to John, no, now would not be the time to buy. If this were to form a top and there was no other profile that formed out here from a 30-minute time frame, the ideal support level would be 1733, which was tested earlier today, and it held. That's the bottom of the profile, but that's likely to change over the coming hours out here. So, Mike and John, I hope that helps you out with regard to the GDX and what is going on there. I don't see any other questions that have come in. I see a few comments. Thank you for those folks that had sent in those comments out there. So where do we go next? Where we should go next is, I know where we want to go next. We were focusing in on the sectors within the S&P 500. Let's go take a look at some of the indices. Specifically, let's go take a look at the semiconductor index when we come back. Is there any chance that that has formed a top out there? Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 440. S&P is off 43. The NASDAQ and the semis have turned slightly green, up 6 and 7 points, respectively. We're going to go back and take a look at the semiconductor. I believe somebody in the den wanted me to look at an instrument. I don't remember if it was platinum or palladium or something like that. Would you please retype that in if you're listening in, and I'll make sure that I get that for you. I couldn't find it inside the den conversation out there. Maybe I'm just not that good at doing 4 things at one time. Now, in the semiconductor space out here, which just turned slightly green, let's take a look at it. We're looking for any signs of a clue of a top out here. And all that we can see is Friday's action. Not when I say all we can see. What we can see about Friday's action is price got up nearly to, not exactly to, it doesn't have to get up exactly to, but nearly to Stevie's weekly green line. That's the oscillator and change line, currently priced at 1669 and change out there. And so that is where a counter trend rally would stop. If price is able to get above Stevie's weekly green line, then the Gartley sell pattern, we looked at a Gartley sell pattern inside the XLF, then a Gartley sell pattern is what would likely give you that topping signal inside the semis. So where there was a question, is now the time to go short the semis? If you did, you would have your stop above Thursday's high out there, slightly further above that because of where my weekly green line level is out there. Is this enough of a pattern just to get up and hit resistance? I'd really rather see some other topping patterns like we looked at inside the XLF as opposed to just getting up to resistance. But that could still be. We can absolutely justify that this would be the end of the counter trend rally. We just like to see most of the indices. They're not all going to top at the exact same time. I mean, they can, but they usually don't. So we look for these patterns to unfold. At this stage here, we know about the semis as they've run into, in essence, where you would anticipate counter trend resistance to go ahead and kick in. We do have the Russell 2000, which is trading much lower. It's off 41 points. The Russell 2000 generating what kind of signal as we speak right now? Yep, a Gartley sell, a gigantic one, because this is only a 0.382 retracement. Now, this I completely understand, don't you? The Russell 2000, dealing with small businesses out here. How many small businesses do you think are going to go out of business? How about we just come up with the normal statistic? In a good working environment, in a great working environment, in a wonderful working environment, what are the percentage chances of people who start a new business surviving through the first year? How about surviving through year 5? How about making it to year 10 out there? Go look up those statistics. Of course, the chances when you start a new business of going out of business in that first year are substantial. I don't recall the exact percentage number off the top of my head. I used to use it when I would do some workshops out there, just as an important statistic. I don't remember, it's like 50% or something. I do remember that the number of businesses to make it 10 years is 5% or less out there. A small business America, the plans that are out here that are in place that people talk about, they're garbage. There's not a chance in Timbuktu. And I don't even know where Timbuktu is. There's not a chance that most of these businesses are going to fail. Most of them are businesses, maybe businesses that you yourself go to, restaurants and so forth. Those folks, have you ever owned a restaurant? Have you ever owned a restaurant? One of the toughest businesses I've ever seen. I did own a restaurant at one time. I was a investor behind it. Worst education I ever got. It cost me a bundle to learn about the restaurant business. What I know about the restaurant business, man, if you're not making your bread come Friday, Saturday night, Thursday, Friday, Saturday night, you have a tough time making the payrolls out there. Yeah, lots. So the Russell 2000 only making a 0.382 retracement and now generating for us today a Gartley sell pattern. That's assuming we've got this bear sash candle that confirms today. This is a textbook Gartley sell pattern. I didn't get a chance to listen to any of the shows this morning, but I've got to believe that that Larry honed in on the Russell 2000, making a 0.382 retracement and then making and completing the 1-to-1 A to B equals CD. Now, for me, the A to B equals CD pattern, prices are going to continue to move higher or lower, but in this case here, they're going to continue to move higher until we see the first bearish reversal candle form, and they're especially important at the completion of a pattern. Well, you got the XLF and you got the Russell 2000 that have those completed patterns out there. Something to think about. Now, the NDX 100, the NASDAQ, it's turned green. It's just up by a couple of points out here. It's the one that is holding on the most. If we try to look for some type of topping signal here on my daily time frame chart, let's expand this out. Do we see anything? No, we've got close but no cigar. The close is getting up to Stevie's weekly green line. That's right now at 83.97. We don't have any kind of bearish reversal candle out here. So it'd be very difficult for me, not only difficult, it'd be impossible for me to tell you that the NDX 100 has topped. However, it could have. Oh, come on, Steve-O. None of this playing in between the lines out here. As long as Friday's high doesn't get taken out, even though I don't have the pattern here, we can fall back to the XLK and what we were taking a look at earlier and start taking a look at its market breadth out there. So we'll certainly continue to watch the NDX 100 because this could be, and it'd likely be, the last domino to fall in the counter trend rally. And that's all that is in place out here. It is just simply a counter trend rally. What else is it that you and I need to be focused on and paying attention to? We talked about it at the beginning of the show, and that was that spot volatility index. Right now, trading at 43.47. So where is that trading in relationship to its 50-day exponential moving average? Well, it's trading pretty much right on it. The 50-day is 43.39. We're trading at 43.47. So let's not get caught up into the 6 pennies out here. It's really trading right at that level. If price closes above 43.39 today, then be careful. Be gigantically careful with those long positions out there. What do you mean, Steve-O? Well, there's one thing that you and I know about the spot volatility index, and that is this. And all you have to do, you do not have to be any kind of technologist to just simply come here, take a look at this chart. The top portion is the S&P 500. The bottom portion is the spot volatility index. And each of those boxes, green or yellow, are representing time periods where that spot volatility index is above or below the 50-day exponential moving average. It's those yellow boxes right now that you want to be paying attention to, because as of 149, you've got price just slightly above its 50-day exponential moving average. It did close below it on Friday. So we got to wait to see what the end of day signal is. For me to tell you what it is at 150, it's going to be totally different come 4 o'clock. So we really need to see what that end of day. But what I am suggesting to you is if you do see that spot volatility index close above the 50-day exponential moving average, that the minimum that I want you to gear up for is a retracement, at least a pullback over the next couple of days out here. And that's where it's going to be difficult, maybe difficult, to stomach a retracement out here, especially in this environment. So that's what we know about that. So that is a key level to be watching out there. Steve Rhodes with TFNN. Got the Dow down 459, S&P 44, NASDAQ up 10. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we have another Gartley sell pattern, I should say, inside the real estate sector of the S&P 500. So you can see here a nice Rhodes momentum indicator bottom. That formed. That has led to the A to B equals CD pattern. The 1-to-1 level was 35.78. That is where price got to on Thursday, I should say. Today, right now, as we speak, at 1:54 in the afternoon, we've got our bear sash candle. So you've got the XLF, you've got the Russell 2000, you've got the XLRE, all with Gartley sell patterns. H.M. Gartley said to sell the first Gartley pattern in a bear market. No one's going to argue that we haven't been in a bear market, are they? No, I don't think so. And this is what's called that counter trend rally. So we just want to keep paying attention to each of the sectors inside the S&P 500 eventually. Now, we're not there yet here. If we take a look at where we at with regard to overall market breadth, we should do that. Let me switch over here. We can take a look at the S&P 500, the NASDAQ. So here's the S&P 500. Bearish for the 60-minute time frame, kind of neutral on the 240, still bullish on the daily. How bullish on the daily? Well, on the daily, you've got a total of 276 instruments trading above the top of their profile and only 29 below. So there's plenty of bullish market breadth out here, which is why we need to be paying attention to sector by sector to see what they're communicating to us. Keep an eye on that XLK, the XLV, the XLF, the XLC. If you just really focus on those four out there, you're going to be able to capture the majority of the S&P 500. So, folks, thanks so much for being here. Stay tuned. We've got 2 more great hours left. You've got your favorite polar bear, my favorite polar bear, the world's favorite polar bear, David White. He's coming up next. And then you've got Obi-Wan Kenobi to take us home from there. I'll see you back here on terrific Taco Tuesday. Of course, we really can't go out and get tacos anymore. We've got to make them all at home. I'm not getting sick of home cooking, but you know what I mean. Same thing for you, I'm sure, too. Have a magical Monday, folks. We'll see you soon.